Why electric vehicle stocks will make us all rich. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove it. And today, we're going to be speaking about electric vehicles, baby. We're going to be speaking about a few things. First of all, the 5 electric vehicles that I am invested in. Those being Workhorse, Tesla, Hyliion, NIO and Lordstown Motors. How I personally decide what electric vehicle stocks are worth investing in and which ones aren't. What I look for in an electric vehicle. What turns me off wanting to invest in an EV stock, and a whole lot more in between, people. So we haven't kind of just made a general video on EV and me updating you on all of my positions very briefly in a long time, so that's what I want to do today. You guys already know I absolutely love speaking about electric vehicles. I'm very excited to make this one. It is my favorite sector. It takes up the largest portion of my portfolio. I love EV, baby. So there's a lot I want to speak about today, so without wasting any more of your guys' time, can I please ask you to smash a juicy like on this video, as it genuinely helps me and the channel out so much. I really would appreciate it. Please hit that juicy red subscribe button if you're new around here. Join the family of investors. And drop me a comment down below. Let me know where you stand on EV and what EV companies you are in the heaviest. I'm really interested in hearing. With that being said, let's get into it. So the very first thing, people, what do I actually look for in an electric vehicle? The most important thing to me is that they have something that sets them apart from the competition. Workhorse, for example, were in last mile delivery. They're completely and utterly American owned. They are completely and utterly electric. They also have the drones. Tesla, it's Tesla. They already have so much of the market share. They are so technologically ahead of the competition. Hyliion, okay, their powertrain solutions are offering an immense service that nobody else is able to offer right now at the same level of these guys. NIO stock, a Chinese play, a lifestyle brand. DPHC or Lordstown Motors, they want to be the first to get their product to market. They want it to be affordable. They have a lot of pre-orders. They have an amazing plant, and they have Workhorse on their side. All of these companies have something that set them apart from competitors. The second thing I look for is that preferably they have to have a tried and tested product right now. A core example of where this isn't true is Nikola Motors. They have all of these big dreams, these big goals. They have loads of exciting prospects. They even have some contracts, but they don't have the physical products right now. I can't see that they're tried and tested. Workhorse, we do. Tesla, we do. Hyliion, we do. NIO, we do. Lordstown Motors, not quite. That's why it is preferable. It's not an absolute necessity, but it is preferable. And then the next thing is that, to me, they have to have exciting short and long-term prospects. This is EV, okay? This is disruptive innovation. They have to have exciting prospects. Again, that set them aside from the competition. So Workhorse in the short term, obviously we have the USPS contract. In the medium to long term, okay, there's great growth prospects. The USPS contract would transfer to long term. There is room for so many more contracts to come alongside. We also have the drone, etc. Tesla, they have prospects left, right and center when it comes to their gigafactories, new technology, everything. Hyliion, short term, the merger, okay, the merger coming through, that will be insane. Long term, getting to full production. With NIO, it's a little bit different, okay, but one of the things in the short term that gets me excited, okay, is the community that they're building and how fast that community is growing. And long term prospects is just their sales. If I can keep seeing these sales go up at this rate, it's going to be fantastic. Lordstown Motors, so similarly to Hyliion, the short term aspect, okay, is the merger happening by the end of this year. Really exciting and should provide a massive bump in the share price. Long term, the fact they already have 27,000 pre-orders and the amount of things that could go right for these guys with Workhorse as well, there is lots of amazing long-term prospects. All of those things, okay, in regards to these EV companies are so much more important to me than things like earnings reports. So many people always bring up the fact that these companies aren't making money yet, blah blah blah. If that bothers you, don't get involved. Don't get involved in any growth stocks. You're not even going to be getting involved in value stocks. Earnings report aren't the be all and end all, especially when it comes to looking into growth related companies, people. We're not going to have good earnings. It really is that simple for a while. Tesla being the clearest example of this in the world. For so many years, this company was not profitable on an annual basis. Yet they managed to go up in value an absolutely immense amount. Now let's just see how these particular EV companies have performed over the last 5 years in comparison to the S&P 500. The S&P on the 5-year chart, 72%. Workhorse on the 5-year chart, 458%. Tesla on the 5-year chart, chart, 717%. Hyliion, obviously we can't value it that way. It hasn't even been public for 5 years. It's not even public yet. But since June, okay, up 162%. Neo stock actually only up 44%, okay? Most of their growth has come in the last couple of months as well. DPHC is a similar story. It was only announced a matter of a couple of weeks ago, but they are already up 34.18%. ARQ, okay, ARK's Innovation ETF in the 5-year chart, 206%. Guys, innovation, disruptive technology is what is in right now, and it's what is expected to be in going forwards for a considerable period of time. And one of the big reasons I think this is happening, one of the catalysts, is the new age of investors. Through websites like RobinTrack, okay, we are now all aware there are so many more people trading now than there was a matter of 6 months ago, a large portion of which are relatively young investors with a massive risk tolerance who want massive growth. If you're a 20 to 25-year-old, okay, and you have a couple thousand to invest every month or so, even a few hundred to invest every month, every few weeks. Let's be realistic. You don't care about Johnson & Johnson. You don't care about Procter & Gamble. You don't care about making 15% a year. You want the money moves. You want the big moves. You have the risk tolerance. A lot of us younger investors have very different mindsets to what a more traditional investor would have in the past. And that's fine. The market is changing. If you look back through the last 50 odd years or so, the market goes through cycles, people, okay? Certain industries, certain sectors will prevail at certain times of the market cycle. Right now, guys, I genuinely believe that EV is offering a once-in-a-lifetime opportunity. Not to say that there won't be another sector or another industry in another, 5 years, maybe a decade, maybe even 2 decades. But right now, I think that EV is that sector. It is that sector that a lot of high-risk tolerance people want to get involved in. It's that sector that offers pretty much the most potential return going forwards, alongside a lot of companies who won't succeed, alongside a lot of companies who you may lose money in. But that is always going to be the trade-off with these massive growth companies. Let's take it back, okay, to about 5-6 months ago when the market crash happened, okay? We all know the S&P went down about 35% or so in value in general. And back then, there wasn't a lot of people speaking about EV at all. The focus was on our cruises, the focus was on airlines, the focus was even on big tech to an extent. The focus was on protecting your money, getting into these relatively value stocks, getting into these safer companies, so that whatever happens over the next few months, you're going to be somewhat okay. We look at the 6-month chart on Workhorse, that also took a big dip, about 50% or so, and it shot up immensely. We look at Tesla, even Tesla on that 6-month chart took a big dip, okay, down 60%, okay? From there, again, shot up over 400% in value. Hyliion, obviously, that doesn't count. It wasn't public knowledge, whatever. Neo, even they took a big dip, but the run-up has been incredible. DPHC doesn't count either. But there has been this absolutely massive shift as of late, okay, from people trying to protect their money in the stock market to people, again, trying to make money in the stock market, which realistically is why we're all here. We're not here to protect our money. We're not here to, minimize losses. We're here to make money over a long period of time. The next thing I want to speak about is that people are starting to realize that these are long-term investments, okay? These aren't just short-term trades. Workhorse is a really good example of this, okay? There was so many people who just thought Workhorse was the USPS contract. And as of late, I've really been trying to show people this is a business. This is an amazing business with so many prospects from a long-term point of view. This comes back to what I said earlier on. I want them to have some sort of short-term prospects coming up, in the next few months, but the long-term prospects are what's really important. And again, I already said with Workhorse, we have drone technology. We have this massive growing sector that Workhorse is at the forefront of. They already work with massive companies like UPS. Even to be considered for the USPS contract is massive. And let's keep in mind, guys, EV is inevitable. It's inevitable. A stage of life will come where you have to use an electric vehicle. It will be that simple, people. I would rather get into them early on rather than when it's too late and they've already all gone up in value 1,000%. I mean, we've seen some massive manufacturers, car manufacturers, get destroyed in value over the last few years. I mean, let's speak about Ford stock really quickly, who's been downtrending for 5 years. They're down over 50% on the 5-year chart, okay? They were down as close as 65% or so at the peaks of the dip. Only since, okay, coming out of the dip, have they started to go back up in value. And Ford is one of the automakers who is getting heavily involved in EV. People are starting to invest in Ford as an EV company, not just as the traditional ICE maker that they are and they always have been. And I also want to show you guys, during the Great Recession, when these were completely and entirely essentially an ICE manufacturer, they lost close to 80% of their value. During this dip, they lost about 50%. And I mean, you all are aware of Ford at this stage. You know, they got a lot of attention. A lot of people were hating on Ford. I'm not an investor by any means, and I don't plan on getting into them. But I genuinely believe that one part of the reason that they have rebounded quite fast is because of their role in EV going forwards. Genuinely, guys, I just think we're getting a once in a lifetime opportunity here, and that's why I am after getting so heavily involved. I mean, my two biggest holders in my portfolio are Workhorse and Tesla. I brought up this example many times. Okay, Apple. If you invested when they went public, okay, before anybody knew what this company was going to do, you'd be up 90,500%. Apple's first iPhone ever came out right about here. I think it was the 7th of June, 2007, okay? Up 2,500% since then. If you saw the vision, that's how much money you would have made in that time period. They really started gaining popularity here with the iPhone 4, June of 2010. Even since then, up over 1,000%, okay, in 10 years. When the iPhone 4 came out, Apple was relatively well established, okay? They were gaining an awful lot of popularity. Even if you saw the vision then, when they had already gained so much value, you would still be up absolutely massively, and I think we all expect Apple to keep going up in value. What I'm trying to get at, guys, is if you get into the next level of innovation, the next level of technology, before it is the next level, that's where the real money is made. People didn't get rich investing off Apple last month. They did so 10 years ago. So these don't have to be short-term plays. They can be long-term plays, and I think as long-term plays, they'll make a lot of money. I said this in a video a little while ago. Workhorse briefly peaked. I think we were above 1950, I could be wrong, and I got a lot of people asking me, did I take some profits? No, because I don't want 20% profits, I don't want 25% profits. I want hundreds and hundreds, if not thousands of percent profits. There genuinely isn't a place I want to put my money more than EV right now. I have a full video where we spend a considerable period of time going through this from IEA. The Global EV Outlook 2020. And if you read through this from start to finish, as I have multiple times, it gets very exciting. If you want to watch that full video, I'll have it up in the corner of the screen now. It's still really relevant. It only went up a couple of weeks ago. But if you are the kind of investor who is like me, who wants to chase massive gains, okay, if you have the risk tolerance, you know, if you can afford to be in the red for a while and you want the massive gains, I don't see an industry that is offering a better potential than EV right now. You could argue things like certain healthcare companies or else, you know, certain small tech companies. I get that as well, but for me, it lies in EV. So guys, there you have it. That is what I look for when I'm trying to figure out what EV companies I want to get involved in. And just a little bit on why I am so heavy on EV right now, because it is taking up a large portion of my portfolio. I'll put it that way, people. Workhorse is now more than 10% of my portfolio. Tesla is another 10%. If you don't have that kind of risk tolerance, if you cannot afford to lose money, if you cannot afford to be in the red for a considerable period of time, please don't do what I'm doing. I really can be. If I'm in the red for a long time, I'm going to be fine with it. If I ultimately do end up taking some realized losses, I'm going to be absolutely fine with it. Not everybody will be, so just, you know, always form your own thoughts and opinions. That's why I have the hoodie that says I'm not a financial advisor, because everybody is so different. But anyway, guys, if you watched until the end of today's video, I hope I was able to give you some value and insight inside of the head of Jack, and I also hope that you enjoyed. If you did, can I please ask you to smash that juicy like button if you haven't yet, and subscribe if you're new around here, join the family, and also drop me a comment down below. Let me know where you stand on EV. I'm really interested, and I hope you all have an absolutely fantastic day, people. I will see you for the next video. Peace.